Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Nick Gaskell, portfolio manager with Eaton, Vance, WaterOak Advisors, to discuss if the opportunity set for equity investors appears to be normalizing. Nick, it's great to meet with you. Welcome to Trade Talks.
Likewise, pleasure to be here, and thank you for having me.
You got it. And following a strong first quarter, equity markets have continued to make new all-time highs. But do you think the opportunity for investors is normalizing at this point?
I do think so. So I think, there's a lot of good news that's begun to be priced in by the market. If we look at the earnings scorecard from the first quarter, certainly there's a lot to like, and I think that's helped propel the equity market higher. The economy is reopening. We have positive vaccine data. So a lot of good kind of incremental data points that I think have been a tailwind to sentiment. Consensus has, continued to move higher. So if we think about consensus earnings expectations for 2020, we're now looking at 34% year over year growth. So pretty robust. That's also a double-digit improvement from 2019.
How concerned are you about inflation and interest rates?
Yeah, I think that's kind of the buzzword of the day. We're seeing the market consolidate a bit today and yesterday as well, as investors try to figure out if inflation and higher rates are transitory. Or if they're here to stay. And, I think the Fed and the market are kind of at odds with each other, a bit of a disconnect. I think all eyes are on tomorrow's CPI print. So that will be kind of the next incremental data point. I do think it's something that's going to cause investors a lot of anxiety over the balance of the year. But it's important to think about what we're comping against. And certainly we're comping against, very low base effect a year ago. And a year from now, we'll be comping against today's comp. So I think we could see the rate of change decelerate as it relates to inflation. And then longer term, I think it's important to think about have some of the trends that have caused us to be in this stable inflation regime, are they gone? Are they still here? And certainly as we think about, rising government debt burdens, we think about technology adoption, globalization. I think there's a lot of trends that have been in place that are still in place, beyond kind of this incremental COVID bump and, as we work through kind of supply chain disruptions and restarting the economy.
Yeah, I just think what the challenge is, the market, you have even just a conversation around it, rates going up 1/4 point, and the market has a complete tantrum. I mean, are we supposed to be in a low interest rate environment forever going forward? I mean, you are seeing signs of inflation, regardless of what the Fed data points are suggesting. I mean, I certainly see it at the pump. I see it at the grocery store. I mean, it is happening.
Absolutely. Yeah, I think it's, there's a lot of anecdotal evidence that I've heard from my colleagues and friends and family as we talk about prices, just broadly. So I think, the market's right to take pause. And I think we've seen some air come out of some of the riskier areas of the market as interest rates and inflation expectations have risen. So if we think about kind of the 5-year tips break-even rate, it hit a 10-year high yesterday. So certainly something that, we continue to keep top of mind, but, we'll be looking for signs that, is this bump transitory, or do we see prices normalize, as we lap things kind of year over year?
So Nick, what kind of companies do you think are the best place to be for the long run with that backdrop?
For us, I think, if we think about the early part of the business cycle, we've seen a lot of higher beta and cyclical areas of the market move high. Certainly the reflation trade has been very prominent amidst concerns for inflation and, higher interest rates. But we've seen a lot of stable, high quality businesses, even some secular growers that have now been sideways, since the fall, or even almost for 12 months. So we're starting to see kind of the marginal opportunity be in these high quality companies. And we think as we kind of anniversary, big year over year gains, broadly speaking, for the market, that this is where the marginal opportunity is.
All right, Nick, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you.